Hey everybody, Barone here. It is Monday, April the 8th, 2024. Another week of crazy off and running. We got a lot to talk about today. Can you believe some of the stuff going on, guys? It is just a topsy-turvy world where every day is a big surprise. It's just a riot to talk about. I can't believe the way the world's rocking. Crazy times. Anyway, before I get rolling, let me take a half a second. Of course, welcome everybody to the show. And as always, thank you guys for your support. You guys being here, hitting me up in the comments. It's always fun interacting with you guys. All the times you hit the like button for me, I really appreciate it. You guys rule. All right, let's talk about markets today. We know we have a lot of information coming up later on this week. Big inflation numbers coming, jobs, all kind of fun stuff. So the market, I really believe today was a quiet day in the market, except the bond market. Not so quiet there, but a quiet day across the board in the market's a weird day. I think the market kind of waiting to see how this data turns out. A little bit of rearranging some bets on the table, but for the most part, holding our breath, waiting to see what happens on Wednesday and Thursday. All right, so markets today, kind of a mixed bag today. We had the Dow falls 11 points, down to 38,897. So still a good, strong number. Not much there on the Dow. The NASDAQ gains 5 points, 16,253 on the NASDAQ. And the S&P falls just 1 point, 5,202. So you can see, not a lot of activity today. No big moves up or down in the market, just kind of a sideways day, all waiting on data. The bond market, on the other hand, pretty exciting day today. Crazy. Man, these markets, bond market really getting shellacked. Prices down, yields up again. The 10-year up 4 basis points, now at 4.47%. No, 4.42%. Can't even read my own handwriting here. The 2-year jumps 6 basis points, 4.79%. Big fear in the bond market that the 2-year could touch 5% again. It did it once. I think it was later last year. That's a really bad sign for the bond market. They don't want it to get to 5%. Now it's been inching its way back up, 4.79. Yikes, guys. It was just under 4.5 just very short time ago, with weeks. Now 4.79, possibly threatening a 5% 2-year bond. The dollar today was down small, down 14 bips on the index, still 104.15, a good solid number. I thought it was heading toward 105. It's kind of been backing down a little bit here. I think the oil price is kind of making the dollar seem a little bit weaker right now, but the dollar is still strong, over 104, and I think the dollar might get a little bit of a pop as the market now digesting what's becoming fact that they're not going to get as many rate cuts as soon as they thought they were going to. Metals today, gold and silver continuing their tear, man. Loving this stuff. Gold up another $7.70 today, now at $2,337.40 for an ounce of gold, on its way to $2,500. Silver jumps another 35 cents, now at $27.77 for an ounce of silver. I've been telling you guys, silver had a big move coming, and boom, here it is, guys. Was $23, inching its way toward 25, was meeting big resistance there. Now, not only is it broken through, it's going way, way past it. Look at the numbers for gold and silver. And and I was reading today, I'll talk about this here. This analyst in Barone's was talking about a 30% still upside possible for gold. That would really be a big move. I got to say, guys, anything's possible with these markets right now. I think the Fed kind of has its head stuffed up its own butt here, not really knowing which way they're going to go, being completely dependent on data. And the data's been just all over the place with crazy revisions. Now they're going to have this election coming up. It's going to put further pressure on them. Not a great time to be a Fed governor, right? Oil today, down small today, down just 41 cents a barrel. Still sitting at 86.50 for a barrel of West Texas Intermediate. I think that's way too high. As I've said, the oil prices are up for a couple of reasons. Number one, it's spring driving season. We're moving into driving season in America. People like to get in their cars and take drives to vacations, Grand Canyon, beaches, and all that stuff. But not only that, the big mover, what's really moving the oil prices, is Middle East politics. Israel and their issues with Gaza, all the Arab nations coming to the aid of the Palestinians in defense of them, not so much physically, but jawboning for sure, especially the Iranians. The Iranians now slugging it out with Iran, the Israelis blowing up that consulate in Syria, killing some Israeli personnel, one of their big generals, I guess. Iran vowing revenge. We'll see where that's what's got the oil market spooked. And oil always, that's a convenient excuse for them to bump prices up a little bit because nothing has really been affected yet. But it could be, so we have to raise prices. What a load of shit. Bitcoin today jumps another $2,305, up $2,305. Bitcoin now 71,661, was briefly over 72,000. I'm telling you guys, these ETFs are a game changer for Bitcoin and other cryptos. I still think you're going to see more. These prices are going to go up. They are. These ETFs change the game now. Maybe it's not going to be something that lasts forever. There's a lot of enthusiasm for these, a lot of money that would have went into these sooner if there was a practical way to invest like there is now. You're going to see a lot more interest in Bitcoin. Okay, like I do every Monday, we're going to talk about what the data is going to be this week, what we can expect, how it could move these markets. Today and tomorrow, quiet days, no data really coming out. There's going to be some oil numbers and a little this and that, but nothing that's going to move any markets. The fun starts on Wednesday. Wednesday, we're going to get the new CPI numbers. Now listen to what they're expecting here, and this is what the good news is. They're expecting year-over-year inflation, top line, to be 3.5%. That would be up from 3.2% last month. Core is expected to go from 3.7% last month to 3.8% this month. We're also going to get deficit information on Wednesday. It's going to be a small, that's the dessert, I guess, to the main course of this CPI number. Now check it out, guys. If those numbers are true, that's going to show us that consumer inflation is rising again. We're moving away from the 2% target and more toward other stuff up to 4%. I mean, let's face it, 3.8% core. You're right at 4% there, guys. Right at 4%. And I would think that the way oil prices have jumped and commodities prices, I would not be surprised to see the top line CPI number come higher than what they're predicting at 3.5%. This is all spooky bad news for the Fed, but it confirms what I've been telling you guys. I really don't see a rate cut coming in June. If we get bad CPI numbers, this month and next month, it's already pretty much the market coming to realize that. The odds on a rate cut in June now under 50%. Just a week ago or 10 days ago, they were well over 70% chance. Now the market discounting that, not really seeing that rate cut coming. I'm going to talk about that a little bit more later in the show. So Wednesday's the CPI number. Thursday, we'll get PPI. Now, PPI numbers have been going down a little bit. Producer prices have not been rising as fast as consumer prices have, but it's still an interesting number because the PPI number, the wholesale number, gives us a little bit of foreshadowing of where the consumer numbers are going. If wholesale prices rise, retail prices follow behind very, very quickly. So the PPI number gives us a little bit of a heads up on what's coming on CPI. PPI numbers have been moderating. Last month was a good month for PPI. So we'll see if it can keep that going. If wholesale prices can stay down, well, now there's a little bit of good news the Fed's certainly going to be looking for because the CPI numbers probably are not going to be good news. Also on Thursday, we're going to get jobless claims like we do every week. Jobless claims this week expected to be 215,000, down from last week's 221. We'll see. That's going to be an interesting day on Thursday. And then Friday to finish the week, we'll get the University of Michigan index, which is always important, talking about both manufacturing and how consumers are feeling, inflation expectations, things like that. And we'll also get the import price index, which is expected to be up, which is also inflationary. When import prices go up, obviously the cost to consumers for those goods and services goes up with them. So it's going to be an interesting week, but today and tomorrow will be kind of quiet. There's always interesting stuff going on in the markets, but the data that could move these markets around a little bit, change expectations, concentrated pretty much between Wednesday, Thursday, and Friday. All right, so let's talk about news you guys need today. As you saw in the headline here, you got Blackstone in the market again, buying up properties like freaking crazy. So they just bought up this group. It's called the AIR Group. It's a real estate investment trust. They own 76 communities. So these are all rental apartments, high rises, things of that nature, gobbled up by Blackstone today in a $10 billion deal. Now, the interesting thing is, for some companies, a $10 billion transaction would be a big deal. I tell you right now, for Blackstone, not even close. They have hundreds of billions of dollars in dry powder waiting to get into real estate. We know that the corporate gurus, these private equity groups and their friends are all about taking over the real estate market. They're in there with both hands and shit tons of money. That's why I've been telling everybody who will listen to buy a house now while you still can, because these corporations are not going to be satisfied until they have the majority of all the properties. They're already doing that in some areas. And what they're doing is they're targeting the low price stuff, right? So they're targeting the beginner, the smaller houses, the starter homes, the houses that are typically purchased by first-time home buyers. People just getting started in real estate. They're not typically buying the 5-bedroom, McMansions. They're buying the smaller starter houses, the 3-bedroom, 2-bath, 2-car garage starter house, the 1,400 square feet. Well, guess what? That's where all the private equity money is going. They're gobbling them up, 40% of the market. They're taking them all. They're coming in now and they're buying up entire new builds. So a builder starts a new development. They're going to build 400 houses, 1,000 houses, whatever. Here comes Blackstone or BlackRock or Carlyle or KKR, one of these private equity groups. How many are you building? How much we do? What will you do for us if we buy them all? And they're just scooping it up, closing this market out. If you're a first-time buyer, I feel sorry for you guys, because it's just going to continue to get harder and harder and harder to get into this real estate market. Hey guys, everybody, Kevin. All right. Jamie Dimon, you guys see this? I know Greg talked about this. His slant is a little bit different than what I think Dimon was really trying to say. I did not really hear him talking about a debt implosion. What I heard him talking about was sticky inflation. Inflation going to surprise these markets, stay higher for longer. He was talking about the impact of wars, Ukraine, Israel, mobilizations, trouble with China, all over the world, these little flare-ups that are happening. He talked about that. He talked about how aggressive central banks were during the pandemic and how the hangover from that and how that's continuing to apply the inflation numbers. He said it's doubtful that we're going to get this soft landing that everybody's been talking about. And I've been talking about that forever. That just never happens. He's saying that rates, if inflation persists, rates could rise to over 8%. So we're at 5.35 now. 5.35. Imagine if rates went up another even to 2.5. It would be bananas, man. The country is already staggering at this number. Imagine if rates continue to rise, if inflation is sticky like he's predicting it's going to be. That was a pretty spooky prediction, because this is the guy that moves markets. His word means something on Wall Street. So that was pretty exciting to hear him talking about that kind of stuff. The futures market, as I mentioned earlier, discounting rate cuts now. Now the odds are less than 50% for a June rate cut. Most of the market is seeing 2 rate cuts max this year. That's down back. Remember, they were at the beginning of the year, they were talking about 7 rate cuts. Then it was 5, then it was 3. Now they're down to 2. A lot of Fed governors talking about no rate cuts. Guys, this is reality setting in. This inflation problem is not something that's over with and done in a week. Hopefully, that you guys are taking our advice and investing your money wisely, prudently, conservatively. Because if you are, you're having fun in these markets. Couple of quick hitters before we go today. As I mentioned, Barone's, check this article out. Barone's talking about gold 30% upside. With sticky inflation, central banks buying it up like crazy. They're saying the gold bull is just getting started to run. They're expecting gold prices to continue to rise. Bitcoin halving coming up soon. I wanted to do a little bit of research about this. What the halving means is these miners who create the blockchain that creates Bitcoin are going to be rewarded with only half of what they've been. They get Bitcoin for doing what they do. They're only going to get half of what they got previously. Now, this is not a one-time phenomenon. They've done this several times. And every single time they have done it, the price at the end of the year was higher than the price was when the halving started. So you have prices at 72 now. If they're around this same price, let's say 70,000, when the halving takes place, you can expect prices at the end of the year to be higher than that 70,000. And lastly, to finish things up, did you guys see Neil cash and carry? I don't think these Fed governors exactly, I think they're even more in the dark than I am about how crypto and Bitcoin works. Neil was comparing Bitcoin to Beanie Babies because they were asking him when the Fed is going to diversify out of some dollars and into Bitcoin or cryptos. He made it like it was a fad, like it's not real money, and that in his mind it could go to zero. I don't know how much Neil knows about Bitcoin, but comparing it to Beanie Babies or some kind of collectible like that, I'm not sure if he's exactly on the right track there. Anyway, guys, nice to see Attila here, Kevin, some of my regulars. Good to see you guys. I'm going to be on the comments when this is over today. So I'll be interacting with you guys. I got the rest of the day to chill today for a change. Nice. And we'll be back tomorrow. Tomorrow, hopefully, will be another quiet day before the sonic boom of Wednesday. We love you guys. We appreciate you. If you could, please hit the like button. It helps get our algorithm changed around, gets our videos in front of a few other people. We appreciate your support. We love you guys. We will be back tomorrow to bring you the news you need. Until then, guys, take care. Thanks.